Inflation hitting its highest level in, get this, 41 years. June's consumer price index shows inflation rose more than 9% from last year, and that's higher than economists expected. Since May, prices jumped 1.3%. It's the biggest monthly jump since 2005. CNBC senior markets correspondent Dominic Chu joins us now to talk about this. Dominic, good to see you. So break this report down for us. Where are prices rising the most?
So, Zinkley, round up the usual suspects, right? It's food and energy. So we'll start on the food front, where the biggest gains in prices between the months of May and June were in places like butter, which is up 5% on a month-over-month basis. Chicken prices, by the way, are still on the rise given the aftermath of the avian flu issues that we've had and supply chain issues. They're up by over 1.5%. Baby food is showing bigger gains as well, up over 1% there. The real sticker shock, though, is coming when you look at some of the food where it was compared to last year and to now. Eggs are up 33%. Butter is 26% higher, and chicken nearly 19% higher on that year-over-year basis. But if you are looking for a bit of relief, check that out right there. It might come if you like steak and burgers, because beef prices are actually falling on a month-over-month basis and are up a relatively modest, if you will, 4% year-on-year. As for the bigger picture on inflation, no surprise that gasoline prices are still driving a lot of that upward pressure on consumer prices. But some of those gains are starting to moderate just a little bit. You are actually starting to see some shorter-term price drops in places like airfare and hotel prices as well. So it remains to be seen whether this is the beginning of a larger trend of lower prices or not. But still, though, if you pay at the pump like I do twice a week sometimes, Zinkley, we have been seeing prices for gasoline fall, which may be reflected in next month's consumer price index report, Zinkley.
And that's a helpful breakdown of how we're seeing this impact goods. I wonder if you can speak to how it's impacting the markets, Dom.
So the markets did react very negatively, to your point, when those results came out around 8:30 a.m. Eastern time. Futures markets tied to the stock market fell rather sharply then. Interest rates spiked higher because traders sold off U.S. government bonds. That can often happen when there's a hotter than expected read on inflation. But things have moderated quite a bit since that data came out. You can see there the Dow's down only 187 points. Now, rising interest rates can also make many tech investments and communications investments look less attractive. To that point, the tech-heavier NASDAQ, which was a big underperformer early on, you can actually see there is positive on the day for right now. So it looks like some traders, Zinkley, are trying to take this opportunity to look and buy some of those bigger beaten-up stocks. So we are well off the worst levels of the day.
Okay, so let's talk about the housing market then. I know that mortgage activity is falling fast, and now that's forcing companies to cut jobs. So what exactly is happening there?
So it's rising interest rates, right, overall. Tight supply for housing, less home affordability, all of that is dragging on the real estate business overall. That slowdown is resulting in some of those job losses that you are mentioning, right? You're seeing the mortgage rates right now going higher, much higher than last year. Now, just yesterday, lender Loan Depot released an update to its business plan. It's part of that plan is to shed about 4,800 jobs, or roughly 42% of its workforce. A lot of that, of course, in response to that shrinking mortgage demand because of higher rates. More traditional bank lenders like J.P. Morgan, Wells Fargo have also been cutting jobs in their mortgage lending departments, as have real estate services companies like Redfin and Compass as well. So it looks like for right now, there are observable signs of a slowdown in key parts of the economy. Real estate, Zinkley, certainly one of those.
A lot to look out for. Dominic Chu, thank you so much.